Hi, welcome to WisdomTree's Fireside Chat on blockchain technology. I'm joined here by Pierre Debrew and Blake Hyman. Blockchain technology continues to make headlines. What is it, and how is blockchain technology used?
So maybe a way to just really start answering that question is focusing on just an example use case. One of the big use cases is really this concept of decentralized finance, and there are applications out there that run on the blockchain, which is just, in extremely simple terms, a database, a shared database that has many individuals working together to verify and maintain the accuracy of this database. And applications can be built upon it. And for example, those applications might be in the form of decentralized finance, where they're offering traditional financial services that might be in the form of, trading services like an exchange, or lending services like a bank may offer. And by offering these types of services on the blockchain, there are a lot of efficiencies that can be garnered due to the overall low cost of not having those additional labor costs and those additional headwinds that are just associated with having this manual interjection with human capital. And by doing that, you end up with a more efficient, cheaper way to offer these traditional services.
I think also the first use case I think we have to mention is the digital asset space in general, right? We have to remember that the first use case for blockchain really is Bitcoin, right? Blockchain technology, they allow to create those databases that Blake was talking about, very much secure, transparent, distributed ledger, and they can be used to distribute value like Bitcoin does, or they can be used to support decentralized apps like Ethereum or Solana as well. If we bring it back even into the day-to-day, blockchain technology is disrupting payment and traditional finance as well, right? If you think about blockchain technology, it allows for basically instant, low-cost transaction without a centralized payer, without using the traditional banking rails. And so you have companies like Visa, like MasterCard, like JP Morgan, they already have piloted blockchain-enabled settlement. And so that also could be maybe the main use case for day-to-day people.
Thank you. Those were really good use cases. But why are investors attracted to blockchain technology?
So I think the first thing is that if you think about blockchain technology as this kind of replacement for database, it has the potential to disrupt everything, right? Every industry is using more and more data. Every industry is using databases. And therefore, there is a potential for blockchain to really disrupt every sector, every company. It is in many ways at the center of many of the megatrends that we have been talking about. And also, we're still very early. I was saying that the first use case of blockchain was very much Bitcoin. Bitcoin was launched only in 2008, right? So if you look at the adoption curve of this technology, we are very, very early. And so from an investment point of view, it is a compelling opportunity for investors to go in early and try to benefit from this long-term growth story.
There's a lot of use cases here, and I think this whole adoption wave that's currently taking place right now, we're in the very early stages. We're seeing a handful of traditional players moving into the space, as well as many new disruptors. But if you pay attention to the headlines, you'll see these subtle movements, and these are the signs that we're making serious progression in this direction.
Yeah, and we always say follow the money, right? So if you look at investors, where they're allocating capital, we are seeing the start of more money going from venture capitals to blockchain ventures, new companies, new ideas. It's still early stage, but with the deregulation that is expected from the Trump administration, for example, we expect that this venture capital money is going to only increase in the next few years. So clearly there is a strong interest from investors.
Very interesting. And how does WisdomTree think about investing in the space?
The idea is to offer investors a strategy that is highly correlated to the theme, that aims to basically have strong performance when the adoption of the technology is going higher, right? And to do that, we leverage the WisdomTree thematic philosophy, which is focused on pure play companies, differentiated portfolio, and also focused on a portfolio construction and a stock selection process that is very much designed specifically for leveraging the blockchain space. And so in the strategy, we have around 30 companies that are spanning from Bitcoin miners like CleanSpark and Riot, but also crypto trading platforms like Coinbase or Robinhood, but as well more traditional companies that are in the payment space or in the decentralized finance space as well, like Visa, MasterCard, PayPal. So it is a very diversified portfolio that really aims to attack all of the use case we discussed earlier.
Yeah, and just to add a little bit more context in how we frame things out is we like to split these type of companies into separate groups. So for example, two of the key groups are the enablers and the engagers. So as Pierre, as you mentioned, you talked about the Bitcoin miners. We classify them as the enablers because they are essentially providing the infrastructure for the Bitcoin network to actually, maintain its, daily operations and allow people to make these transactions day in and day out. Now, their revenue model and their business model is quite different from another group, which is the engagers, who are more leveraging the technology itself, adopting it into their current business offerings or new business offerings to really innovate within the current traditional economy. So when we look at constructing these portfolios, we really take into account the different business models and the risks that are attributed to those business models, because the enablers have very much a lot of different characteristics that would really be driving their performance versus what the performance of, say, an engager would actually have.
And what are the benefits of gaining exposure to blockchain and digital assets ecosystem via equities in US's ETF instead of going directly into cryptocurrencies?
Yeah, so this is a very important distinction between obviously the direct crypto asset exposures you talk about. Some of the key benefits are for traditional investors is one, you have the income statements, the balance sheets, the cash flow statements that give you a more familiar way to actually invest in these assets rather than looking at these more bespoke metrics that are blockchain centric. We also see the technology being very disruptive and the overall adoption of this technology, whether it be through just broader adoption of, say, digital assets or digital currencies themselves being integrated into traditional payment systems, traditional financial services, as, say, even just as an investment. But this underlying technology and the underlying services that need to be available to allow all of this stuff to proliferate is going to grow. So as this grows and as these firms continue to tap into this area, they should really benefit strongly from this theme growing. And we see this kind of being covering multiple spaces, as I said, the enablers, the engagers. And I think that this is a very exciting growth opportunity that sits actually alongside or outside of your pure digital assets type of exposure that one may have in a portfolio.
Thank you very much for a very interesting discussion today, Pierre and Blake.
Absolute pleasure.
Thank you very much.